Hello, I am Vishal Prabhukhanolkar. I am going to talk about private banks in India. Before starting to talk about private banks in India, let us see the structure of the banking industry right now. According to Wikipedia, right now India has 96 commercial banks, 27 public sector banks, 31 private banks and 38 foreign banks. Out of which, if we look at it from the asset base point of view, private banks own 18.2% of the entire assets owned by the banking industry. So that is the extent to which private banks have come up. Before going further into the role of private banks, let us see how private banks have come up in the first place. The banking industry in India is very old. We have around 200 years back, we had the first banks come into India. After that, most of the time, public banks have operated out of India. In the 1990 era of liberalization, private banks were allowed for the first time. So some small banks were given licenses to operate inside India. These were the starting banks in the private banking sector of India. So some of them were Oriental Bank of Commerce, UTI Bank, which is now called Axis Bank, ICICI Bank or HDFC Bank, and so on and so forth. The main thing about these banks was these banks were considered as high-tech banking industry. These banks were very agile, very lean, very fast, very customer friendly and very innovative in use of new technology which was available. That is the way they had a competitive advantage over public sector banks which were available to everybody and anybody at that time. Another milestone in private banking sector in India came when RBI passed a regulation saying that FDI of more than 10% up to 74% can be done in private banks. So now external institutions could come in and invest up to 74% with some considerations, with some rules, up to 74% of investments of stakes of a private bank. The same regulation also provided a foreign investor to vote in the day-to-day operations of the bank. But at the same time, the other corollary of that regulation was, if anybody is doing greater than 5%, is holding greater than 5% of the bank's total shares, then RBI has to vet that ownership, then only that ownership is valid. Over years, private banks have grown in number and in their reach. But a lot of work is still to be done as far as reach is concerned in the rural area. Right now, in the rural area, the largest penetration is available through public sector banks only. Private sector banks are coming up with new and latest technologies, efficient and lean methods to get a competitive advantage over foreign banks as well as public sector banks. But the reach in rural area still remains a question. Also, one more thing before we conclude the discussion about private banks is that private banks are highly criticized for the aggressiveness that they show in recovering the loans. Some cases also have been reported of customers committing suicide because of the aggressiveness in recovery of loans. So that aggressiveness is one more factor where private banks can work on and improve.